Hello. So this is the Financial Awareness Blueprint, which is um, a sheet that allows you to track everything finance in your life in one single place. Um, so I'll walk through each of the tabs and a summary of what's stored on each of them. And then we'll go through a more detailed analysis of how we're supposed to use each sheet. Okay. So this is called the Financial Awareness Blueprint. And the first tab that you see here is the Instructions tab, which tells us a little bit about each of these sheets, just in case you forget, and also has a list of instructions on how to use um, this entire workbook. If we go into the Ins tab, this is where we track all of our income sources, how we're feeling about each of the income sources, how much money is in, how much money we're receiving from each of these sources, what the frequency of payment is, whether we are making this money, we are paid this money weekly, bi-weekly, twice a month, monthly, annually, or if it's a one-time payment. Some of you might be asking, what is the difference between bi-weekly and twice a month? When you're paid twice a month, in a year, you will get 24 payments. If you are paid bi-weekly, in a year, you will get 26 payments. So it's important to know which frequency of payments you are receiving. Then there's a column, again with a drop down, that says taxed before reaching your account. If you are taxed, so here you would input whether the money is being taxed before it reaches your account. So a lot of employers will make sure to withhold your taxes, your federal taxes, as well as your state and possibly your city taxes before it reaches your account. And if you are freelancing, a lot of times your employer will not withhold taxes before reaching your account. So if you don't know or you're pretty sure that it's not taxed, make sure to enter no or yes, depending on your situation. Um, the next column is the date of payment that you could input, especially if it's a one-time or annual payment. This can help, especially if you're freelancing or especially if you have a payment during a year that is ad hoc. It helps keep track of all of this come tax season. And so you can record your date of payment. And the last column is for deposit account. This is where you would write down what account your money is coming into. And this is the income sheet. What we see at the top here is a summary of the annual amount, as well as the monthly amount you're making. And possibly, if you have untaxed income, then it would show you the untaxed annual amount. Again, this can help, especially that untaxed annual amount. It would help you come tax season to make sure that you know how much is not taxed and how much tax you would possibly need to pay based off of that. You would be able to calculate it. All of these three columns, the annual amount, monthly amount, and untaxed amount, those will be automatically calculated when you input your income sources and fill out these frequencies, the amount, and whether they are taxed or not. So this is an overview of income. You should look to fill this out anytime you have a pay. So if you are on a constant payment. Anytime you have a payment increase or your salary goes up, come back and change the amount. If you have an ad hoc payment that comes into your account, make sure to add it in here. The second sheet that we will go to is the outs. The outs sheet tracks all of our expenses. So there are three major categories of expenses that we will track here. The first is general day-to-day expenses, which you will see in yellow. The second is debt, any money that we owe. It could be in terms of your student debt payments at various interest rates that we see here, and you can identify them differently. Any credit card debt payments that you might need to make. And the third category is in purple. It is savings, investments, and retirements. It is money that goes into an account that you don't use immediately. And all of those can be listed here. What you see on the left-hand side are just placeholders. Please feel free to go in and change the name of this if you want to name it, rent for your apartment, or rent for 5 people, or however you want to name these. You want to name your Wi-Fi Spectrum Wi-Fi, please go ahead and change these per what your items or cost buckets look like. Any kind of gifts, anniversaries, Broadway, anything you spend money on here would fall under column B. So when you start using this sheet, make sure to go in, you put in any items or areas where you have expense or debt or retirement, investment, or savings accounts. Make sure to go in and fill all of these and delete whatever you do not need. Anything that you feel like you will add on in the future, you could go ahead and leave it, and you can leave it blank in terms of any cost amounts. The second thing that we would do here is once we've listed out all of those expenses or cost buckets, it's important to figure out how we're feeling about each of these areas. We could be feeling thankful for having a mortgage because it means that we have a home. We could feel indifferent about certain things. We could be very proud. We could, feel a little guilty about others and so forth. And it's important to identify how we're feeling about each of these expenses in various areas of our life. And we'll see why that's important in just a minute. So once you've listed out your items, go back in, list out your feelings associated with each of these items. It's fine if you'd like to leave some blank. It's fine if you have multiple feelings associated with any item area. The third thing that we will fill out is whether it is a need, a convenience, or a want. Now, what is the difference between these three? A need is something that's essential to our being. We need a house to live in. In this day and age, we need Wi-Fi to make sure that we can work, make sure that we can attend classes, and so on and so forth. So figure out what are needs for your survival and what are needs for you to live. Those would be classified as needs. What are conveniences and what are wants? Conveniences are nice to have, where it may or may not bring you a ton of joy. It makes your life easier. So for example, takeout for me would be a convenience, right? Whereas maybe shopping or buying video games is a want. And so convenience is something that makes your life easier, and wants are something that enhance your lifestyle and contribute to your positive, happy feelings. The next thing to go in and fill are cost types. So there are various different types of costs. There are fixed costs, which means that the costs are remaining fairly constant over a certain period of time. Usually you would look at 6 months to 1 year. Usually those are things like rent or mortgage or Wi-Fi or phone bills. Um, we know our rent for a year is going to be, $1,200. We've locked in a lease. And so that would be an example of a fixed cost. A variable cost might be something like your utilities, where every month it fluctuates, where you don't know how much that's going to cost month over month. Guilt-free spending is anything that we want to spend our money on without feeling guilty about it. Debt, we mentioned those, which are mostly highlighted in the green area. Those are any money we owe. Investments are any money that we are putting in for the future long term. Retirement is money that we're saving for when we retire, and savings are different kinds of funds where maybe we are saving for a specific goal. We could be saving for an emergency fund, we could be saving for a vacation, we could be saving for a piece of furniture, we could save for multiple things. So this column would note down all of those. Now, the next few columns are related to the amount. So you would put in how much you are spending in that area. You would put in the amount you are spending, and then you would select the frequency from the drop down. When are you paying your rent or mortgage? And what is that? How often are you paying those expenses? This is a good place to note them down. And then finally, you would have the annual cost, which would automatically populate. So if I put in my rent is $1,200 and I pay it monthly, your annual cost for that would pre-populate, and you will see the annual amount that you spend. Everything here at the top will get calculated automatically. Now the last column that we see here is an action. Do I want to change this? What does this mean? This means that we combine our feelings and our needs, wants, or convenience to figure out how we want to change certain expenses in our life. For example, let's say in terms of food, I feel guilty about how much I spend on takeout, and it is a convenience for me. And the amount that I spend in that specific area might be very high or relatively high compared to how much I can afford to spend in that area. And so maybe my action there is that I want to decrease my spending in this area. And so you would use this at the end to kind of go through and see how many areas you want to change your spending in. So the ins and outs sheet combined give us a snapshot overview of how much income we are making and how much is going out annually. So if let's say you are making I'm making $60,000 a year, but my expenses are about $65,000 a year. That means I am spending more than I am making. And then there are certain areas that I can go back into. I can go into this column where there's an action. I can list all of the areas where I want to decrease money, and I can look at all of those cost buckets and actively try to make changes in the way I spend, which will get me into a better place where um, my outs will then reduce compared to my ins, which means I have net positive money coming into my account, and the amount of money that I spend compared to the income that I am making is less. And so that can contribute positively to my lifestyle overall. Now, the third tab that we have here is called accounts. This is where you can list all of your various types of accounts that you have. These could be checking accounts, savings accounts, certificate of deposits. It could be high yield savings accounts. List as many as you have. Any investment accounts that you might have with different platforms, any retirement accounts that you might have if you've held 6 jobs and have had 2 or 3 internships. You might have retirement accounts from all of them. Make sure that you go back through, list all of those accounts you have, any wallets, money wallets that you might have, and any balances, as well as any crypto accounts that you might have. Um, this fourth column shows this column D is used to note down your account number or any other kinds of notes that you might have related to these accounts. Column E will help us discuss what type of account this is, whether it's a checking account, it's a savings account, is it a certificate of deposit, is it a high yield savings account, and so forth. And you can record what type of account it is there. It's also important to know when we opened this account, how long we've had this account for. And so this column will tell us the account's opening date. If you have a specific date or the year, you could also put any combination of month plus year, but just ballpark when you've opened that account. Then the next column is any fees associated with the account, whether you have any monthly charges that you have to pay to. So for example, if the Capital One certificate of deposit had some money that I had to pay, monthly. These are very rare. Usually there will not be fees associated with an account. This is not interest that you pay, that either you are paying because of overdrafts or not meeting minimums, and it's also not interest that you are making. This column is specifically for if your account costs money for you to maintain, then you need to pay the institution with which you have the account. Any kind of interest that you are paying on an account, if you have overdraft fees, those should all be recorded in outs. Those should all be put here. You could add a row here, and you can say, if you have a debt payment, and you have uh, you know, a late fee, or if in your credit card debt you have an overdraft fee, you can make sure to add those in here. The accounts is only for any fees that you are paying the institution for holding that account. The next column shows the account minimum. Is there a minimum amount that you need to maintain this account? Sometimes your accounts will have minimums, sometimes they will not. So it's important to go in and check and make sure that you are noting them to prevent any overdraft fees. So if you pull more money from the account and you are supposed to maintain a minimum balance, this helps us record what those minimum balances are that you need to maintain in your account. Now, the last 2 columns are more use as you go, and it's dependent on how often you check your accounts. This is a good place to list average or certain amounts that you have within each of these accounts. And again, they do fluctuate because we add money or money comes in and out of these accounts quite often. So an approximate value of how much is stored in that account and also when you last checked it. So anytime you go in and check it, make sure to update both of these columns. And this helps within your units. If you're doing multiple, you could have just your accounts. This is another column that you could use in terms of um, if you're sharing an account, or if there are multiple people in your household and you would like to list down multiple accounts, you could say, um, Chase, checking, Jane, Chase, checking, Alex. And so you could have multiple account names and accounts listed for multiple people in a household. And this is a great place to store all account information in one place. Again, this depends on how much information you are storing within your family and how much information you are sharing. Now, the next tab that we're moving to, the fourth tab within the financial awareness blueprint, is called the cash flow analysis. And this is probably one of the sheets that you would use the most. And what is the cash flow analysis? The cash flow analysis tab tracks accounts and cards from which money is transacted out, important expenses in each account or card, and the payment dates. It also shows us the amount spent through each account or each card monthly to track and plan outflow over time. And I will show you why this is so important. So, a great way to start off here is to list down all of your large accounts from which money is transacted out of. You can list both accounts, as well as here you can see I've listed all of the cards. So list all of your accounts and all of your cards where you are transacting money out of. Rarely you will transact money out of a savings account regularly. But if you do, please make sure to list all of them here. What you see in italics underneath each one is the large payments that happen within that account. So for example, if your vehicle loan or your student loan is getting paid out of your checking account, those would all be listed here. For cards, it's important to list down various things. You don't have to list down everything that's transacted out of your card, but you could group it. And you could have multiple, so maybe on one card, on two cards, you are paying for vehicle gas. And so I would list down gas under number 2, and I would also list down gas under number 5. And so it is absolutely fine to have multiple lists underneath each card. Now, the aim here is to capture the large payment areas that are important to you, that you want to make sure that you remember. For some of them, you don't have to list anything under if that helps you, but if it helps you to figure out which payments are listed under which accounts or which cards, this is a great place to do so. The second column here, which is the third column here is called account that the money is pulled from. So in the case of accounts, it's going to be possibly pulled from the same accounts. In the case of cards, you would have to list down which accounts you pull from. If you pull from multiple accounts to pay off a specific card, just put commas and put multiple accounts that you are paying out of regularly. Now, the next column is automatic payment or a pull. Now, what is the difference? If, for example, this account, I have automatically set it to pay every month, then this would be an automatic payment. But in case I do like more control over an account or a card, maybe I don't have automatic payments. And so in that case, it would be a pull, which means every month I make that payment manually. Then the next column here is notes on the accounts or the account number. And here it is to put any kind of notes that you would like. associated with any of these payment areas. The next column is payment date or billing date. This is again very important. So, for example, if your vehicle loan goes out on the 2nd of each month, you would fill that out. If your student loan goes out on the 5th of each month, you would fill that. If this card every month is due on the 17th, you would fill that out. If this card is due on the 22nd, you would fill that out. So make sure to go in and fill these because this is something you're going to use regularly. And so anytime you need to make payments, you could come into this sheet and say, okay, for this credit card, I need to pay it on the 17th. I would look at my balance for that month or for my statement balance, and then I would make sure that I am able to have at least the minimum, if not the statement balance, if not the full amount in the account ready to pull, especially if it's an automatic payment or even if you are pulling from that account. The last column that we need to fill in here is the payment recurrence column. Most of these would be monthly. So again, the payment recurrence would be associated, in the case of accounts, would be associated with these individual payments. In the case of cards, you would put in the payment recurrence associated with each card, which would usually be monthly. Let's say for the gym here, I am charged quarterly or annually. You could put in that payment recurrence here. Now, where this sheet becomes really powerful is being able to track your expenses monthly. So in the case of, so if we look at how these expenses have changed from January all the way through June, let me zoom out here so we can see the whole picture. Okay. So for my vehicle loan and my student loan, every month I pay $350 for my vehicle. That is consistent over 6 months. For my student loan, it's the same thing. I pay $300 every month. Now, electricity fluctuates based on usage. That is a variable type of expense. And so we see that in January, February, March, and April, it was quite high. But then as we got into May and June, that started to fall a little bit. Similarly with gas, we saw that in January through March, our gas payments, or through April, our gas payments were quite high. But in May and June, it fell significantly. And what that means is this sum over here for January, which is very simple, where if you want to put in a sum, so you've inputted these, but you want to total and figure out how much you are paying every month for this specific account, you would just select, and this would sum up how much you are paying for this account. And so what this tells us is that in January, I paid $840 for these 3 payment areas, but in the summer months, I paid a little bit less. And so over time, as we start adding more and more months to this, this will give us a good picture of how much we are spending over time. And it helps us plan better in case we see a certain pattern within our cards or within our accounts. And the last sheet is an itemized sheet for those of us that like to list down every expense that we have, especially when we have cash transactions. This is a great place to list them, where you can list the month, the year, and then the date of your transaction, and your category, which could be cash, card, or account. You could talk about the charge or the item or the expense or the category area that you have an expense. You would list down the amount you have spent And you can also list down the frequency, whether it's one time, whether it's a subscription, whether there is a certain recurrence with it, and then any kinds of notes associated. And so all of this gives us a good view of our finances, and it helps us understand our income, our outcome, or our expenses. We have a great way to track whether we are making more money than we are spending, or vice versa. It helps us track all of our accounts in one place, especially if we're opening or closing an account. This is a great place to do so and make sure that we're listing everything out. Cash flow analysis, probably by far the sheet you will use the most to track what dates you have for various payments and also the trend of your payments over time. And then finally, your itemized sheet, which lists down each individual line item of expenses. And this is your financial awareness blueprint overall. Okay, thank you.